Okay, good morning, everyone. Let's get right into the stock market technical analysis. We're going to start off today with triple Qs, the tech sector. Again, that's just kind of my favorite sector for trading. It moves a lot. So when you get good signals, you can usually catch good amount of gains. So that's kind of why I start off with that one. Triple Qs. We're in a battleground right now. You can see we're just kind of battling now, and you can really see it on the hourly chart here. We've kind of got this range. It's basically over the last 2 days, this range right here that we keep chopping around within. The upper end of the range that I'm seeing is about it's the highs right here. It's about 356.75-ish. It's that level that I had talked about the other day that I thought we would rally up to, and that's where I was looking to re-short at. And so far, that's exactly what I'm doing. I'm just sitting short. I know a lot of people said they went long yesterday, and then who knows, they probably exited those longs today. So there's a lot of chop going on, a lot of whipsaw signals. You can see the bottom of the range is about this 351.70 area, and we broke below it yesterday, but then they recovered it, rallied it back up to the top of the range. Today, gap down, broke below it. So far, they've recovered it again. So again, it's just a battle between the bulls and the bears. And, we just have to kind of hang tough and wait for this to resolve one way or the other. All right. So I'm looking for more downside, a resolution to the downside. But, there is this gap up here. So it's right up there at 350. It's about 360. Okay. There is the potential to run up and fill that gap. All right. So if we fill that gap, that's probably the end of the bounce. All right. If you see that, but no guarantees we're going to fill that gap. So again, they've made it look like they wanted to fill the gap a couple times. If they've rallied it up, it failed. Tried it again, it failed. They tried it again, it failed. Okay, so there's no guarantees we're going to run up and fill that gap. And I actually would probably put probability that we're not going to run up and fill that gap, and we're actually going to resolve to the downside. That gap, one thing that gap does, if you flip to the daily chart, this was from my perspective, the rally that we saw over the last few weeks was a bear market rally. So I think we're entering a bear market. Qs already fell over 20% from the highs, 22%. So technically that's a bear market. And then we get this rally. Well, I think that rally has ended, and the way they trap the longs, or at least the late to the party longs, is with that gap. So you can see you rally, kind of chop sideways, gap down, and just never really give an opportunity for those, late to the party longs to exit with their money back. So that's kind of what those gaps usually will do, and that's why I'm putting more probability that we do not fill that gap and that we continue lower. Okay, the SPY. We haven't looked at this one for a while. Just looking at the daily chart here, and that's really all I'm really concerned with is the daily. We're just slightly above the 200-day moving average. So again, we're just in a battleground. They're trying to hold the 200. The bulls are looking to hold the 200. The bears are looking to take it out. And that's basically it. So whether we hold, we got to just see how the day closes and also how the week closes. If we see selling into the end of the day and we close out the week, below the 200, then that will probably mean that next week we're going to have some substantial downside. Okay, so that's really all I have there on the SPY. And then IWM, this was the downtrend that was started. It's really been downtrending since about November of 2021. We broke to the upside, and we created this slight downtrend trend line. We broke to the upside here, and we're backtesting it right now. So that might be, an objective area to go long for a continuation to the upside. I don't think so, though, because the key level that I'm really watching is big resistance here at 209. And again, rolling back out, that was over a year-long support. And right there, you can see all the tags of support that we had. We've broken, that's been resistance ever since. So about that 209 area, big resistance. Here we popped above it and failed. It was a clear rejection. So I'm leaning towards more downside. I don't know if we'll get it today or not, but I am looking for that downside. And I'm going to remain short on my position. So triple Qs, IWM, I'm going to remain short. Again, I pointed out those kind of levels that I'm looking for. And until something technically changes, we're just in this chop zone. Gold, again, more sideways consolidation in between the range right now. So we're just kind of going sideways here. This is your top of the range, about 20.75. Bottom of the range, about 18.34. In the middle. So I don't know which way it's going to go. I don't see any indication in the momentum indicators telling me that we're going to, go either way. So we just have to wait for one of these ranges to, to get hit. If we trade down, that's a buying opportunity, looking to buy the dip down here. And if we trade up, then you'd probably want to wait for an impulsive break above that to signal, that we're starting that next leg higher. I could go either way. I'm not exactly sure which way it's going to go. Okay, oil. So oil continues to kind of break trend on oil futures. You can see we're breaking trend here. And momentum does look like it's heading lower. So perhaps oil is going to correct. All right. I'm seeing signs that we might get a correction in oil. I'm not looking for anything big. Commodities being in a really strong bull market, I'm looking for, it's most likely going to be a buy the dip opportunity, and people are probably looking to buy the dip. But so far, oil's starting to break trend. And then like oil refiners, like this DVN, this is the one I'm looking to short. But again, I talked about it yesterday how there's the potential to short, but I needed to see more downside, more impulsive selling. We didn't get any of that, so I didn't short it. And sure enough, they have held that trend line and, rallying. So until you get that impulsive breakdown of this trend line on the daily chart, which comes off of the October 2020 timeframe, clean up trend line here, looking for that impulsive breakdown, which is the sell signal. The reason why I'm looking for that and just why I think it will show up pretty soon is we've got big negative divergence on the momentum indicators here. Guys, as I'm going along, if you're interested in learning this skill set, learning this technique, I put together a video training course. It's about 4 to 5 hours of trainings. I go through risk-reward analysis, trendline analysis, divergence analysis, lots of different concepts, candlestick analysis. Link in the description below. Check that out, guys. It's I put that together for you. It's not free, but it's affordable. I priced it at 99 bucks. My time's not free. UPS, this is a short trade idea. I pointed out when we got that sell signal a couple days ago. That's your sell signal. So again, you had negative divergence that had been building. Here's your trend line support right here. Support, and then you had support again, and then you gap down. So you had a sell signal back here on April 5th. And it's pretty much been all selling ever since. Today, they gapped it down. You're seeing some buying step in, throughout the day, but we're still moving lower. So I'm just sitting tight on this one. We should get rejected. They might try to rally it up and recover this 193.27 and close it right there. But ultimately, because we've started to break down, I am looking for us to head down to the next level of support, about 177.40, 177.50. Okay, that's good support. You can see it was resistance, and then, it basically support right there. Big gap up, support again. All right, so that's a big level. I would put a very high probability that we're heading down to that level. We should get a decent bounce off that level. Okay, so most likely I'll cover my short position on a move down into that level. And I step in a little bit early. I don't wait for the exact penny, but I do expect us to move down into that level. Financials. Okay, 37 is the big level, all right? There it is again. We just hit it yesterday. It's a bounce off support so far today. So they're bouncing. And again, as you roll out, I've got a lot of drawings here, but here's 37 right here. You can see resistance all through here. Then it was support. Not much of a reaction there. Support here, support here, support here. Lots of gaps and movement around that level. And then again, another reaction just yesterday at 37. So, whether we go up and hit the 200 and get rejected again, that's completely possible. At the end of the day, we need to see a break at 37. A nice impulsive breakdown should signal more downside in the financials, and most likely heading down to this trend line right down here. I think these are going to meet up at the same time, or roughly about 35 area as the next level of support. But again, we need to see that break of 37. All right, so that's something I'm looking for. Again, we were building negative divergence. This was a divergent high right here. That's your last divergent high. And at the end of the day, we've basically just been kind of going sideways in this big sideways kind of chop zone. So, you know, it can be frustrating for bulls and bears because it moves up and then it sells down and then it moves up. It's just going all over the place. So at the end of the day, we need to see a solid break of that 37. And just a quick scan of these ag commodities, you know, you can see they're all rallying today. So again, if commodities continue to rally, the Fed is going to have to continue to get more hawkish on the market. So you can see, you know, sugar cane is hitting, you know, a new high in this rally. Corn is up. You know, coffee seems to be bouncing off. It seems to have bounced off the 200 here and look likely to continue to rally. Soybeans near the highs. Wheat, you know, wheat's got a little ways to go. This was kind of your Russia spike higher, but I think we're probably going to hold and continue to rally. So we're just seeing, you know, commodities continue to hold their bullish trend, and that puts inflation pressure. So continue to look for the Fed to talk hawkish, whether they act hawk. You know, right now they have come out and said they've really come out and said they're going to be pretty hawkish with 0.5% interest rate hikes and reducing their balance sheet. Whether they actually do that, I'm not exactly sure. I think what's going to happen is they're going to continue to really try to scare the market. They're trying to get the market to correct a little bit without actually doing anything. So they don't really want to raise interest rates, but they want to act like they're going to. So maybe they'll probably do another 0.5 point interest rate hike, putting us at 3/4 of an interest rate. But ultimately, I don't think they're going to do that many hikes. They're really going to try to scare the market. And that's why I think they're coming out now saying we're going to reduce our balance sheet and we're going to do a lot more hikes. And they're really starting to get hawkish in their rhetoric and their talk. I think they're trying to get the markets to correct back a little bit so they can get some of this inflation pressure to come down just through the nature of, you know, markets correcting, people kind of quit spending as much. And then they can back off on their hawkish talk and, you know, not actually have to be that hawkish in terms of rate hikes. That's what I think they're going to do. We'll see. Guys, I'm going to finish up here. Drop me a thumbs up on your way out. I'm going to do a live stream tomorrow morning around 9:30 Pacific time. So look out for that if you're interested in joining in that live stream. Bring any stock charts or stock picks you want me to analyze. I usually spend about an hour going through those. So I will see you then and catch you on the next one. Bye.